Welcome to the National Stock Exchange, and welcome to the opening session of the third edition of India Global Forum's IGF Mumbai. I'd like to start by thanking our partners, the National Stock Exchange, Nuvama, and Gift City. This session focuses on a topic central to the discussions at IGF Mumbai 2026, Catalyzing Capital, across the next 2 days, the evolution of India's capital markets and their growing importance in the global financial system. India's markets have demonstrated remarkable resilience and depth in recent years, even amid shifting global liquidity conditions and geopolitical uncertainty. As domestic participation grows and global investors continue to look at India with renewed interest, questions around market development, regulation, liquidity, and long-term capital formation are increasingly important. To explore these themes, please join me in welcoming to the stage Mr. Manoj Ladwa, Chairman and Founder of India Global Forum.
Thank you ever so much, Isha, and welcome again to everybody that is joining us for this opening session of India Global Forum, Mumbai. It's such a pleasure to be here at the National Stock Exchange, and I'm thoroughly grateful to Ashish Chauhan and the entire team of the National Stock Exchange. It's a conversation, Ashish Bhai, you know, that we've been having for a couple of years to host one session at least at the National Stock Exchange. And I'm so delighted that we've been able to make this happen. And it's so good to see so many familiar faces and several new faces as well from the IGF family here for this session as well. And I look forward to catching up with you over the next couple of days. But first, let me introduce this short and very snappy session that will open the conversation for IGF here in Mumbai. Friends, there are people who shape institutions, and there are those that build institutions from scratch and then come and finish the job. The person I'm going to have pleasure of introducing now is firmly in that second and rarer category. He was part of the founding team that created this institution, this great institution, the National Stock Exchange in the early 1990s, and one of the most now consequential institutions of India's modern economic history. He has spent the decade transforming the other stock exchange, the Bombay Stock Exchange, but he's now back as the CEO and Managing Director of the National Stock Exchange. So friends, without further ado, let's all welcome Ashish Kumar Chauhan. Ashish Bhai, if you don't mind me calling you Ashish Bhai. So Ashish Bhai, firstly again, thank you ever so much for having us here. I alluded in my opening to the fact that most people only get one innings, but you've had two innings in this significant institution, and that's a remarkable arc. So my first question to you is, when you walked back into the National Stock Exchange, what did the place feel like after the first innings? And what did you think that, hey, there's some business that's unfinished here? What was that?
Thank you for bringing IGF here. As you said, we were discussing, and I've been trying to entice him, saying this is the best venue in India. And of course, if you come here, you make money, right? So he was not believing. Hopefully, he will make money, more money, that is. And so he'll come and list IGF here at some point. So for me, NSE brought in a revolution in early 90s in terms of the technology which India could use, India could produce, and run on a mass scale. It kicked off India's public digital infrastructure framework. It kicked off even just the pure play IT systems, because this was the first IT system which was used by public in the country. In those days, we did not have telephone lines which were across the country at a lower cost, so we had to set up a satellite telecom network and things like that. So that's where this organization came up. It was a stock exchange, but it was also an IT company. And it remains to be an IT company under the guise of a stock exchange. And so I was one of the founders. I designed most of the IT, but this building was also kind of constructed under my, sort of it was reporting to me. Although when it started, I had already left to start on my own in B2B commerce in 2000. And then in 2022, after 22 years, I was told to take over as a CEO. But 22 years is a long time in the history of a nation, in the history of a company like this, where the technology which I had left behind remains same, almost the same. Most of the algorithms were written by me, and most of the regulations were written by me. Even the Nifty index we are celebrating today, 30 years, was created by me. The equities market, first time screen-based trading, and also derivatives trading, all were in a way created by me. So when I joined here, there were what I call some backlogs that happened in terms of the scandals, personal scandals, as well as the technological scandals, where there were people saying that some people were consistently getting faster access, even within the fastest access zone called co-location. You've all heard of co-location, probably. You've read Flash Boys from Michael Lewis and things. But that's a toys play compared to what we do here. We are on a scale today. When I joined, it was not there 4 years back. But when I joined, of course, let me talk about that. And today, where we have come. So we had an issue on technology. Technology was kind of giving up faster because we were scaling up faster. And so we had not designed for that. We had a personal, that is, human resources issue. People were there for long, but then there were allegations on them. The regulator wanted some of them out and things like that. People were not willing to join us because the scandals were so bizarre that people thought good things don't happen. And the people's trust has to be bought. What we manufacture as an organization is trust of people, right? We don't manufacture anything else. And trust is a very difficult thing to create, but very easy thing to give up, right? So the trust was kind of going away fast because of a kind of a decade of allegations every day. And that's where, and some of them were like totally unbelievable.
You've mentioned scandals a few times, and you've obviously cleaned up a lot. Has the cleanup finished, or is there things still you need to sort out?
No, broadly, now I remember the scandal, none of you do, so it's broadly cleaned up. But the fact is, you have to wake up every day and clean up, right? I mean, it's like a house. The dust comes in, things start going, and so if you are not alert, vigilant every moment, so like today, I run 24/7, and I try to make the organization runs 24/7 because of the same reason that you can't falter. This place may be important to me, but it's much more important to India. If it has to grow, India will grow on the back of this organization. Last 30 years, when this place started in 1994, India's total market capitalization was around $60-70 billion. After 32 years of working of NSE, now it's $5 trillion. The trust which we have been able to build in terms of the companies, but more importantly, there were only 1 million people participating. It was all rich people's game in 1994. Today, I have 127 million people with 250 million accounts I directly serve. Every nook and corner of India, India has more than 19,400 pin codes. We are in all pin codes except 28. And out of 28, probably 25 are airports where nobody stays permanently. I can't do KYC. Right? And I have people at 7,000 meters, 8,000 meters in Ladakh. I have people in Andaman Nicobar. Some of them are moving around with the spears, but they have my accounts.
So you've mentioned, I had 100 million, it's 127 million registered investors. Do you consider that a personal victory or a victory for the exchange? And then when you look at young investors today and their behavioral patterns, do you feel entirely relaxed?
Absolutely. See, for me, it's the way I look at it is what has happened in last 30 years, especially last 11 years, because the numbers are much more clearer to me on last 11 years. When Mr. Modi took over, India had like 900 billions market cap. Today, it is 5 trillion, right? When Mr. Modi took over, there were 16 million investors, 16.7 million investors. Today, 127 million investors. 11 years has seen a lot of middle class coming up. When you come to stock market, you come after you have some house, you have some food, you have some fixed deposits, you have some gold, then you think of stock market. So when you come to the stock market, 127 million people in India is like 12.7 crore, we say. Is not big on a scale of 1.5 billion. But it's actually 90 million households.
But does the investor pattern, sorry, I'm just coming in here, but does the investor behavior that you've seen over recent times, let's look at the futures and options market, there's been a boom, yet are there areas of concern for you here? Is it something that troubles you at all?
So 90 million households. India has around 350 million households. Each household has 4 people. That makes it 1.4 billion people, right? So I am serving literally more than 25% of households, right? And out of this 127 million people, on a month-to-month basis, around 2.5 million people trade in derivatives, 2.5 to 3 million. Where is 127? Where is 3 million, right? Out of that 3 million people who trade, they account for around less than 5 to 6% of all the traded volume. The remaining trading volume is done by professionals. First 15,000 accounts account for 86% of the volumes. The next 100,000 people account for next 10-12% of volume. So the smaller guys, the lower strata, is doing around 25 lakh people, that is 2.5 million people. They account for around 2 to 3, probably max 4% of the futures and options. But still, it's a worry. Why? Because no society can actually afford to have the lower strata people getting into wrong activities which they cannot afford. And that's where we have also proposed to the government and to regulator for last 3-4 years since I joined here, saying we need to have some minimum qualification criteria for people to participate in derivatives market, like it is there in Singapore, like it is there in US, and most developed countries have a minimum qualification criteria so that people who you don't want to come into highly risky markets don't come in.
Do you think that's going to come soon?
I hope it does, because for me, when you start thinking that taxing higher is a way to tell people not to come into the markets, that's like saying cigarettes, you know. Now, out of 120 rupees packet size, probably 100 might be the tax and 20 rupees. It just creates another behavior where people go into outside the tax zone activities. For me, somewhere, if you don't want a person, and India is so high-tech today, that today, if you forget that you are traded on NSE 3 months back, Government of India pre-fills your income tax returns. Pre-fills. You can't forget, even if you want. The same government can tell me that person has paid so much tax, allow him to trade in derivatives. It's a one flag they have to send me every year. I can do it. So it's not that we can't do a high-tech kind of a situation. Everything is doable. It's just somebody has to take up the issue saying, if you want to really protect small investors, then don't allow them to come into this market. Otherwise, you can try to say that, no, we want to protect small investors, that's why we want to charge higher tax, probably it may work, it may not work, right? Because in the last 5 years, STD has been increased some 3-4 times.
So I want to come back to the point you made about the NSE as much a technology company as it is a stock exchange. And if you can just talk us a bit more in detail of that particular journey that you're on, and where do you think, is technology so much in the DNA of the NSE that you can now just sit back? Or do you foresee over the next 2-3 years new technologies coming up that will support the work that you do as a stock exchange?
Even in '94, I used to say that technology is like riding a tiger. The ride is very uncomfortable, but if you get down, it eats you up. So you are never comfortable on technology game. And if you are the pioneer, if you are the world leader, not only in thinking but execution for like 32 long years, you are always very uncomfortable saying what next, right? Today, to give you a scale, on a good day, I get 20 billion orders in 6 hours. On a good day, I do 300 million trades in 6 hours. 20 billion orders in 6 hours is almost 50% of all orders in the world in all exchanges put together. New York Stock Exchange gets around 4% of what we do. Okay, in terms of the number of orders, number of trades and all. 50% of all orders, all trades. So many times people say, can you scale up? I said 50% of the world I am handling, and now what is the scale, right? But I still have to scale up because 4 years back we were like 1/5 of what we are today. And so, and we give you response time in microseconds. 1 second has 1 million microseconds. I give you today response time in 100 microseconds.
How does that compare? Sorry, I'm just. How does that compare with other exchanges? I know we've had a conversation
so
last year.
Nasdaq is very similar in the speed, not in scale. Scale we are like probably 20 times larger. But on April 11th, the 26th, that's next month, we will start giving you response time of nanoseconds in our main markets. Today on currencies market, we give you nanoseconds response. 1 second has a 10 raised to 9 nanoseconds. That is a billion nanoseconds, right? So we are going to give you that response time. And people tell me that why do you require such fast response times? Because humans can't even look at 1/1000th of a second. You are talking about 1/10000000th of a second. But this is also telling India's, India's progress on technology. Yes. It's a way to say that we are far beyond what you can think of. And we are also today having a capacity of around 6 to 7 million orders in a second. 6 to 7 million orders in a year for a good exchange is reasonable. I'm currently having 6 to 7 million orders a second kind of a capacity. I'm now increasing it to 100 million orders a second, right? So our scale is a kind of a different world. Our speed is different. Just to say, and see, the difference between Google and me, or Twitter and me, or Facebook and me is very different. In ChatGPT, you can ask any question to ChatGPT or Google or Facebook. They will give the answer they want, not the correct answer. So in my case, all 20 billion times you place an order, I have to recreate an order book and I give to all of you same time without making a mistake. Suppose you want to buy a share at 100 rupees. I tell you, no, that you have bought at 100.05, you are going to come and kill me, right? Google will give you any number and you accept it because it's free. In my case also, but I can't be, because even if I give you free, you will still blame me, right? Because you can't blame Google, right? But you can blame anything.
So I'm just looking at the expressions on everybody's face, and I think the word that's coming out is, wow, Ashish Bhai, this is quite impressive. And the one phrase you did not mention is AI. Is AI an opportunity? Do you see it as an opportunity for you, or is it another headache?
No, everything is an opportunity. See, for me, the technology is like a tsunami. Either you can flow with it, you try going upstairs, it's going to anyway take it down, right? So might as well go down with it. Try to figure out where you can use any new technology that comes, right? For me, AI has its own advantages. Today, the way it is structured, it has its own disadvantages. As I told you, I can't be non-deterministic. When you want to buy at 100, I have to give you at 100 or below. But you ask any LLM, it will actually match you sometimes at 1,000 also. You want to buy at 100 and they'll give you match at 1,000. You don't want to pay for that, right? So what is non-deterministic? I use AI quite extensively. Like I'm also, the exchange also a regulator, so we pass a lot of orders. We have to catch all the orders in the world, especially in India, coming out of every court in India, to check whether what orders we give are in consonance with what is coming out currently or not. So we have AI tools which actually take all those new orders that come, take them and give us what we need to do, keep us out. If you file a prospectus with us, we are able to check, say, 500 parameters, whether they are comparable or with previous prospectus of other people or not, and give you answers immediately instead of going through those 600 pages of fine prints and take you 6 months to sort of give answers and all. And we also use it for coding, for example. Our coding, large part of it happens now on using AI, but we do it on premises. We don't go on the cloud because ours is a much more sort of sovereign work, so we don't want data to go or the code to go on the cloud and all. So we do it in a very different way, but we are basically people who use any new technology that comes out just out of lab. We don't develop technologies, but once they are out of lab, we would be the first people to use it. But in a way, when if you tell me to match it on, like today, people tell me that Chicago has gone to cloud. Cloud, you go once, the response time I give you in nanoseconds, you won't even figure out even seconds there. And 1 second and 1 microsecond, I mean nanosecond if you leave aside, 1 microsecond and 1 second are very similar to 1 day and 3,500 years.
You know, you're killing my next question, which is about where does the NSE fit into the global international standards of exchanges. But I'll come back to that point in another way. I want to just slightly change tack. And a lot of international observers and investors who I speak to, they know Mumbai. They refer to Mumbai as the financial capital of India. But then they are starting to hear of a city called GIFT. How do you see the interplay between Mumbai and GIFT? Some people say that, well, there's a competition going on here. What's your reading of this?
See, when I was involved in setting that up, the first exchange that was set up there was by me. And today, the concept of GIFT City is very simple. That what Hong Kong did to China for 40 years, from 1989 to sort of literally now, is that it allowed the world to invest into China using a kind of a tax-free zone, which was also more Anglo-Saxon, and the laws were easier, which people from outside could understand. So what Hong Kong did to China, the GIFT City will do to India. Today, after 4 or 5 years of working there, we have an exchange there which works 22 hours a day. Before Japan wakes up, that exchange starts. After California sleeps, that exchange sleeps. I can work 24 hours there, even here also, but there we actually do work 22 hours. And we trade all the orders on Nifty index, which is our main index, that comes to Singapore and also to that city directly there. And we trade almost $5 billion a day of futures there, which is again one of the larger exchanges in the world in last 3-4 years since we started working there. We have raised around $80 billion for corporate bonds from that city. It's early days, but we have also listed bonds from Sri Lanka. Sri Lankan governments and banks have raised funds from third-party countries on that exchange. And so it's a competition, of course, but to Singapore, Hong Kong, Dubai, and only in this budget, the finance ministers announced that out of 25 years, if you set up a company now, next 25 years, you have to select which 20 years you don't want to pay tax. Zero tax. If you're operating out of that city, out of next 25 years, only 5 years you have to pay tax. It is assumed that it will take you 5 years to make a profit, so that those 5 years you don't count. And then next 20 years you select. So literally 25 years, zero tax zone, right? If you go to Singapore, it's 15%. If you go to Dubai, it's 9%. Gift City is 0. So for me, it's a competition to the rest of the what we call international finance service centers. It trades only in dollars and of course in other currencies, not in Indian rupees. But it's a way for third parties to raise funds from fourth parties, but also for people from abroad, including NRIs, to come through that city to invest in India. So, and not naturally, Indians will also invest abroad through that cities. So we are also creating gateways for Indians.
Financial and institutional innovations taking place. And if I were to summarize, Hong Kong has its significant role in the East and in China. Shanghai will always remain Shanghai. Beijing will always remain Beijing. Mumbai will remain Mumbai. Delhi will remain Delhi. That's the...
Yeah, and away from the daily nitty-gritties, it's a different... In India, we have several regulators. We have SEBI for stocks, RBI for the banking system, IRDA for the insurance, pension, PFRDA for the pension. There in Gift City, there is only one regulator called IFSC authority. They give you all the approvals. And so there is no... You don't have to go from pillar to post. It's like within probably less than 2 kilometers, the entire city is over. So you can walk down, of course, not in summer, but because summer is pretty hot there. Fantastic. But otherwise, it's a very interesting concept. Earlier, the way I look at it is the financial centers used to develop on literally the seashore. The best ports used to have the best exchanges. But today, because the physical goods used to move, today with electronics and networks, where you're getting the least tax is where you want to go, right? And that's where the Gift City comes in.
Okay. No, we're now coming to our rapid fire round. So we're going to change the pace a little bit. I've got a few quick questions for you and just one-word answers as quickly as you can. Bull market or bear market, which one teaches you more?
Bear market teaches you more. Bull market is where you live for, right?
Okay. One financial regulation that you'll repeal tomorrow if you could?
All financial regulations have a place, so never repeal anything without understanding. It can have repercussions.
The regulator's next door, I think. So.
No, I have been regulator all my life also.
The index funds or active management, where does your money sit?
I do for index funds, purely for the reason that at least I know that humans are infallible, index is not. So many times I say that America had Warren Buffett, India had Nifty. Invest in Nifty.
Okay. Which one city outside of India you think is most underestimating India's financial rise?
New York.
Ah, good. Howard, you heard that? Okay. And finally, a question that everybody has on their mind, the IPO question. In 3 words or fewer, when's it happening?
6 to 7 months.
Before Diwali, after Diwali?
Hopefully before Diwali.
Boris Johnson said that the UK free trade agreement would happen before Diwali, but he didn't mention which year.
In 26. Although the free trade agreement, both of us were there when it was signed finally.
Absolutely. Absolutely. So a final thought. What will it take, and a final reflection from you, what will it take to make Mumbai, this place, a truly global financial capital market that's truly international in its in every sense?
Broadly, when India becomes capital surplus, when our per capita GDP becomes comparable to rest of the world, we'll start exporting capital. That's when people will come to Mumbai to raise capital. Today, we go abroad to raise capital, not because we don't have business or we don't have ability to do business. It's just that we are capital starved since literally 500 years, right? Because our capital was taken away. Now, slowly we become slightly more capital oriented, but we still require a lot of capital. That's why, and I mean, I have this theory that earlier business used to be capitalism concept which Karl Marx created. Before that, there was no such word. So the capitalism for him was you put in a lot of money and then you make a lot of more money. capital is number of heads, right? And so more capital, you make more capital. For me, with technology going forward, slowly many technologies have come up where you put in little capital, a lot of brains, and then you can make a lot of capital. So which is what I call capitalism without capital. And still you require little capital, whatever, $1 to $5 million. Today, NSE is the only exchange. India is the only country in the world which is a micro or a tiny company market on public. You are able to raise literally $100,000 on Indian stock market. Of course, if you want to raise $100 billion also, we'll raise you for you. But $100,000 also are very difficult to raise because all the merchant bankers and lawyers charge you like millions of dollars of fees. Whereas here, you are able to raise in last 14 years since we started that tiny market, we call it NSE Emerge. We have 700 companies listed on NSE, and their market capitalization is now probably $60, $70 billion. They've raised $3 billion or less, right? So for me, we are creating a framework for capitalism without capital. And if a venture capital funds you, good luck. But despite all our beliefs that has been created by page 3 of the financial newspapers, trespassers are not getting funded. It's only a myth. Out of 10,000 people, only 1 person gets funded, 9,999 don't get funded. If you don't get funded by those venture capitalists, angel funders, whoever you can think of, you can come to stock markets. I have 127 million people with little capital. Even if 1,000 people out of that, 127 million, put in money in your company, you're going to give wings to your dreams, right? And hopefully if you make money, my investors will make money. And that is what my dream is, that everyone in India should become entrepreneur.
Thank you ever so much for that. We're in danger of being thrown out now because I've just had the indication that we've got to wrap up. But if ever there was an elevator pitch, an excellent elevator pitch, not only for the National Stock Exchange, but for India's capital markets, I think we've just heard it. So once again, Ashish Bhai, thank you ever so much, and wishing you all the very best with the IPO. Thank you to Sailesh Bhai and your entire team at the NSE for the journey ahead, the journey from now, so that you will celebrate a fantastic Diwali, and so will many of us here as well. So wishing you all the very best, and thank you for your time.
Thank you very much, Manoj and Ashish, for that conversation. Don't leave the stage just yet. We now move to the National Stock Exchange bell ringing ceremony, which marks the convening of IGF Mumbai 2026 here at NSE. To join us for the ceremony, may I invite Howard Morgan, Chairman of B Capital, Anjali Bansal, Founding Partner, Avana Capital, Dr. Vijay Chauthewale, in charge, Foreign Affairs, BJP, and Shiv Sehgal, President and Head, Nuvama Capital Markets. If you could just join us on stage for the bell ringing ceremony. Thank you. everyone. Thank you to the National Stock Exchange once again, and to our associate partners, Nuvama and Gift City. And thank you to all of you, our incredible audience, for attending today. Please do make sure that you get a photograph with the iconic bull statue outside, and do remember to tag IGF on your social media when you post. May I please request those who are participating in the round table later on to gather in the ground floor conference room number 2. Thank you very much, and we will see you all tomorrow for the IGF Forum and the IGF Dialogues at the Quorum Club. Thank you.